Hello friends, James Stevenson welcoming you back to part 2 of my Tesla earnings forecast video review series. I'm joined as always by my co-host Loki, who is curled up in bed, sleeping, kind of bumbling around in bed a little bit right now. You can keep an eye on him in the Loki cam below me as I continue the tour here. In this video, we're going to review tweets 6, 8, 15, 18, 28, 29, and then a bunch from the back of my 69 tweet forecast thread. I already reviewed the production and delivery related tweets from this series. In this one, I'm going to review the revenue related charts and tables from my detailed Tesla earnings forecast model to get you all caught up on my expectations for Q4 2023 as well as all of 2024 and 2025 by reviewing those tweets from my 69 tweet forecast thread. So let's take a look at this tweet number 6. Here's a chart showing Tesla's quarterly revenue since 2009. We won't know the Q4 revenue number until earnings are released on January 24th, but the growth story is far from over. I try not to ever release a version of this that has my forecast on it for revenue. I try to leave this actuals. I may have done it once or twice, but being very careful to note that it had my forecast on it because people are so used to just being able to retweet this chart. This is some people's favorite chart that I make, which is nicer than to say. Even though I don't make this chart myself in Excel. The numbers I load into a spreadsheet and then drop into a Flourish template. So flourish.studio is where this template comes from that I drop in my numbers and my years and quarter labels onto to populate this chart. I've been keeping this up to date for many years. How long? So long that you used to be able to see the bars for 2009, 2010, and 2011. Those have now become so small that they don't even appear. They're not even 1 pixel wide anymore on a scale that goes to 81.5 billion, which is what Tesla's revenue was almost in 2022. How much more than that is it going to be this year? Well, I think it'll be another 26 billion on top of this 71. So call that 97 billion, almost 100 billion worth of revenue for Tesla in 2023 is the point as this just continues to grow. This is probably one of my most approachable charts. It's pretty easy for people to just glance at this and go, oh, the Q1 revenue number keeps getting bigger every year. And look at Q2. It keeps rising from a higher year-to-date Q1 base every year and growing by more. Hey, look at these Q3s. Look how they gallop away off to the right. And of course the Q4s are doing the same thing, just jumping off to higher and higher levels every year. And that's only one of the tweets we're going to look at in this video. I'm going to skip this one because that's EBITDA. EBITDA is not revenue. It's a profit metric. This one is revenue, though. This is a chart showing where Tesla's average dollar of revenue comes from, including my forecast. Tesla Energy should see substantial revenue growth from Megapack XL as new Megafactories are built and ramp up, aided by U.S. IRA incentives. The Inflation Reduction Act, the hilariously named Inflation Reduction Act, in which the government is going to create and spend a lot more money to reduce inflation. That's how that works, right? I took Economics 101. Milton Friedman would not be happy that they called it the Inflation Reduction Act and then spent billions of dollars they didn't collect as tax revenue. All right, so what's this chart show? How Tesla makes its average dollar of revenue? Well, mostly it's coming from sales of automobiles. That's the big, kind of a dull yellow color here. Then the bright yellow color, the very strong yellow, is the regulatory credit sales. That's not yellow at all, that's orange. You'll have to forgive your host who is colorblind. I'm doing my best trying to tell you what colors things are. I'm a little bit colorblind. I'm not very colorblind. But sometimes stuff like that will confuse me when it's super small on a different background. All right, so these are the orange numbers here. Regulatory credits used to be as much as 5 cents out of every dollar of revenue Tesla collected. That has fallen now to about 2 cents on every dollar worth of revenue. How about leasing? Some people aren't buying their car outright, they're just renting it from Tesla essentially for a 3-year period and then giving it back. Well, that revenue also counts. It had been as high as 4 cents. That's been coming down to 3 cents. Now, I show this on a 12 trailing month basis. Otherwise, you would have seen a sharper drop here in Q4 of 2023 because the lease percent really fell a lot from historical levels in Q4 of 2023. A lot less people want to lease a Tesla right now, or Tesla wants to be doing a lot less leasing now than they had in the past, maybe due to the high interest rate environment. We also saw Tesla sell off some of their lease assets for cash, and they're going to have to pay that back later. So they've kind of added to their debt a little bit, but I think they did it to reduce the uncertainty over that receivable. So when you let people lease cars from you, you're trusting them to keep paying you back. They've promised that they're going to make monthly payments. And if you hold those lease receivables yourself, then you hold the risk if they stop making those payments for whatever reason, right? Like if the interest rate's too high for them and they can't afford to make the payments, then that's your responsibility to eat the loss if they don't pay you. But if you package up those securities and sell them off to a big bank or something, then it becomes the bank's problem if those lessees stop making their payments. So you're guaranteeing yourself the cash in exchange for having to pay back a little bit of interest over time, but you have limited your liability for those cars sold under a lease, which I think is what Tesla was doing, figuring, hey, it's a pretty high interest rate environment. Let's play this as safe as we can and just get the cash for these now. All right. Next is the energy segment, the energy division of Tesla. This is where they make solar panels and solar roof tiles and battery storage solutions like Powerwall and PowerPack and Megapack. The one of those that's going to grow by the most is Megapack. These are semi-trailer loads full of batteries that utilities can use as a storage solution for their power plants. So if you put in a lot of solar as your energy production power plant, you're going to need a lot of battery storage because the sun doesn't shine all day and all night. It never shines at night. So you're going to need a lot of batteries to keep providing power continuously from that site, even though you're only producing more electricity when the sun is shining on those solar panels, right? So as the world transitions to more sustainable energy, like solar and like wind, the wind doesn't blow all the time, you need big energy storage solutions, and Tesla is one of the leading providers of those with their Megapack product that ought to be scaling up a lot over the next year or two. I've got Megapack sales doubling as Tesla ramps up production from their Lathrop, California Megapack factory. Credit to Bradford Ferguson, owner of Rebellionaire.com, for coining the phrase Megafactory. And Tesla's going to build one in China as well, so that's going to help them continue to expand in 2025. We don't have specific plans yet on when that factory will open in China, but I have to forecast something, so I've got that growth in 2025. And the last one here is the services and other segment. This is everything else. If it's not a car and if it's not an energy division product, it goes here. So the service centers, this is repairs. It's all the supercharging locations throughout the world. So as more people want to supercharge at Tesla's facilities, that revenue goes in here. and everything else. Tesla insurance, Tesla merchandise from the merchandise store, a bunch of other random stuff is in that group. Okay, so that's tweet number 8. Let's scroll on down to tweet 15, which I think is the next one we'll find revenue on. Yeah, this is the regulatory credits revenue. Now, I may have gone conservative here. We saw in the previous video someplace I may have gone too aggressive, which was the Berlin Model Y production in Q1 of 2024. Probably they're not going to hit that number that I've got in the forecast, but maybe Tesla's going to beat on this regulatory credits line item and make up for it. And those two errors will offset each other to some degree or another. I captioned this one in the previous charts. We excluded regulatory credit sales. What's a regulatory credit, I hear you asking? It's money Tesla gets from competitors who did not make and sell enough EVs to comply with applicable law to avoid paying the government even more in fines. And we'll look at the chart while I explain that a little bit more. So some competitors, some legacy automakers, have decided they don't think there's a market for EVs because the reception hasn't been warm for the EVs they've been making and trying to sell people. So they've announced that they're going to be reducing production of those while the dealerships try to sell the ones they bought already, I guess. And that may leave them in a bind because they will not have sold enough EVs to comply with applicable law in the US or in Europe or in China. And what they will need to do is buy regulatory credits from competitors like Tesla who sold way more EVs than they need to comply with the law. So in Tesla's case, every single vehicle they produce is an electric vehicle, zero emission, qualifying for a credit. And in the case of a lot of other automakers, maybe they're only making barely enough to cover their own obligation because they sell so many combustion engine vehicles, right? So for years now, people like Gordon Johnson have been saying regulatory credits are a one-time item and it's going away. I made a meme about that a few years ago, saying no, it's not going to go away because nothing magical is going to happen in this intervening time period, 2021, 2022. What did you expect was going to happen that would magically allow every automaker in the world to be producing enough EVs to comply and not need to buy regulatory credits? Gordon Johnson. So what you've seen here is that since that time, like 4 of the regulatory credits revenue exceeding what had been at that time the record have been exceeded since. So some quarters you get like a restatement that's like an accounting treatment rule change thing. I think that happened here and maybe here. But in Q3 of 2023, the most recently reported quarter, that was the second highest regulatory credits revenue ever. And what I want to show you with this chart is I'm not forecasting crazy stuff, right? These are not actuals from Q4 forward. You can see this is my forecast. That has the gray bar under it that says forecast. I don't know what these quarters are going to be, and glancing at the most recent actuals, probably I'm low. Probably some of these quarters are going to be higher than what I'm forecasting here. So I'm not forecasting crazy stuff for regulatory credits revenue. There's plenty of opportunity for Tesla to beat my forecast for regulatory credits revenue. All right, that's not revenue, that's not revenue. This is, here's a chart that underscores the point I made in tweet 7 of this thread. That was the EBITDA chart. We haven't looked at that one yet. But the point stands alone without you having to know anything about adjusted EBITDA. Apart from volume, my forecast for future years' earnings growth is largely driven by more buyers opting to pay for FSD at premium pricing as its features improve, but it's tricky to guess at timing. So a couple of years ago, I had way more earnings in the forecast for these 3 years, 2023, 2024, and 2025, than I have now. Mostly because I was too optimistic in forecasting how quickly Tesla was going to be able to sell a lot more full self-driving packages to a lot more buyers at higher prices. So I've taken my forecast way, way down, and that accounts for most of the reduction in earnings and EPS in my forecast. I do still have it ramping up at the end of 2025, but I may have to push that again if Tesla again doesn't get FSD uh, as as fully functional as promised, as quickly as promised. It's been 2 weeks for a long time, Elon Musk, on getting FSD that works without needing to be supervised very closely. If you have FSD, always pay attention, keep your hands on the wheel, and be prepared to take over at any time, as the message says on your display, until such time as Tesla says they will take responsibility for the safe operation of your vehicle and you won't need to pay attention. We don't know when that day will happen, but here's my forecast for FSD revenue. I think it's been about $1,000 per vehicle on average globally this year, and I think that'll rise to maybe $2,000 per vehicle by the end of 2024, and then rise from there, past 3,000, past 4,000, to something really high at the end of 2025 if Tesla has been able to show the world in the next 2 years, which seems like a long time, that FSD is very helpful and that you should buy it because it'll be able to do most of the driving for you with or without you needing to pay attention to it. It'll be very capable of doing all the driving. And that'll help it sell better. That's what's in my forecast. It's not as sharp an increase as it had been a couple of years ago. But there's your update on FSD revenue at time of purchase per delivery. And remember, there's a huge fleet of vehicles out there. Over 5 million Teslas are already on the road, capable of being upgraded to full self-driving with an over-the-air software update. And that could be a lot of revenue and income and earnings for Tesla when that happens, if a lot of existing owners decide it's time to try buying FSD. All right, I'm not going to talk about this one. What's the next one I want to get to? I think it's 28. The next revenue chart. Yes, this chart shows how big a deal Tesla's 40 gigawatt hour per year Lathrop Megapack factory will be for total Tesla energy storage deployments, including Powerwall, once ramped, and Tesla plans to build another 40 gigawatt hour per year megafactory in China. So let's take a look at this. What's this? It is megawatt hours deployed. So the top line on the chart is 10,000. If you're producing 10,000 per quarter, that's 40,000 megawatt hours, or 40 gigawatt hours per year worth of production. That's where I have Tesla ramping to as a run rate by the end of 2024. So here's where we were as of Q3. Here's what I have forecast for Q4, etc. This is the Megafactory ramp of production. And you can see what all the historicals have been here. Tesla didn't have a Lathrop Megafactory to use until, I think, 2022. So they've been ramping up slowly and will continue to ramp up. This is how I have their production ramping. Why am I talking about this during a revenue video? Well, I didn't talk about it during my production and deliveries video because you don't think of megawatt hours deployed as being a production or a delivery. I guess kind of it's a delivery. There's just nowhere else for me to talk about this. These bars become revenue when you collect, $2 million-ish per megapack that you sell. So there's that chart. Then this next one is also revenue. There's cost of sales on it too, but I'll talk about it right now. Those energy storage gigawatt hours become billions of dollars of sales for Tesla, and as output from the megafactories rises, economies of scale and local sourcing of parts and raw materials will improve profitability. I promised you, well, I'll show you this chart first. So here's what the revenue ramp does. It does the same thing that the megawatt hours of production delivered does. It ramps up and to the right as time goes by, and then I shouldn't talk about cost of sales in this video, but it's on the chart, so I have to. There were quarters when the cost of sales was more than the revenue from the Tesla Energy division, right? Solar panels and solar roof are not the most profitable product you can sell. It's an extremely competitive market for that product. But Tesla does have a home run hitter with Megapack if they want to ramp production of it up. So that's what I have in my forecast. As the revenue rises a lot, the cost of sales will not rise as sharply, and Tesla should be making more earnings out of the energy division as a result. And then what's the other thing on here? I promised you 30 pretty charts, so here's one more I'll be updating as soon as the source publishes the 2023 numbers for each automaker. I only had 29 charts, so I had to add one more because I had promised 30. So here's one showing automotive revenue by automaker. Tesla is in red here. Everybody else is in some shade of gray, from a very light gray to a very dark gray up here for Toyota and VW that are at the top, followed by Stellantis, Ford, Mercedes, GM, BMW, etc. You can see Tesla keeps passing more and more automakers every year and seem likely to do so again in 2023 if that revenue number is anywhere close to $100 billion. They'll probably have passed more than half of these automakers in the 2023 column. And that's it for the revenue charts. So now let's go take a look at the assumptions that build up to the revenue numbers that we saw in those charts. That's further down in my thread. So I'll scroll past the section we already saw, which was the production and deliveries section, through about tweet number 48. Yes, to get to stage 2 of my detailed forecast, here on tweet number 49 of 69, where I estimate the revenue per model produced at each site by making assumptions about take rates and pricing for each option/feature buyers can order, as well as other ASP impacts, such as value-added taxes, leasing, regulatory credits, and discounts. So what are we doing here? Well, it's the same principle as we saw in the production and deliveries section, stage 1, except now we're trying to figure out how much revenue there is. Well, how do you do that? We already know how many vehicles we're going to deliver, so that's part of the formula is, okay, if you know how many vehicles you deliver in each quarter, that's a good start to guessing at how much revenue there's going to be. What's the missing piece? You need to know how much revenue there's going to be on average per delivery. If you have that, you can multiply the deliveries by the revenue per delivery, and that'll give you revenue dollars. That's the idea here, but if you want to build up to that revenue in detail so you don't miss stuff, what determines how much revenue there is per vehicle? Well, it's how people configure their order in the design studio that decides how much revenue Tesla is going to make on their order. What car did they order? How did they configure their car? Tesla only has so many options. It's a finite set of options available to you to configure your car, right? So that's how I approached it. I just said, okay, for the Fremont Model S, what questions does Tesla ask you about what kind of Fremont Model S you want? And I'll use that to build up to how much revenue there ought to be on average. So the first line in the section is base configuration. Okay, how much does the base configuration of a Model S cost? Tesla reduced that price to $74,990, maybe at the end of Q3, and then for the entirety of Q4. That number had been a lot higher in prior years. The base had been 96, 97,000, something like that, so it came down quite a lot. Then for paint, I have 0 in here for Q4 and Q1 because I think any color paint is included with the base for Model S at the moment. Otherwise, I wouldn't have planned it that way, so I hope that's true. Then for the performance package, I've got this number lower than normal. So in 2022, I think a lot more people were buying Plaid. It was newer back then. The people buying Model S's back then weren't as value conscious or budget conscious, perhaps, as people are today in the current interest rate environment. So I'm guessing fewer people are buying the Plaid performance package Model S these days than used to. Then for wheels, maybe less people are taking the wheel upgrades these days than used to. Full self-driving, I've got less than $1,000 worth. Sorry, that's the interior line. Is less than $1,000 worth of spending on the upgraded interior package for the Model S. Then for the full self-driving package, Model S buyers seem likelier to me to want to buy the full self-driving package than buyers of less expensive models. So I've got that at about $6,000 per vehicle. So that's assuming that maybe only half of Model S buyers are opting for the full self-driving package at $12,000, but that'll rise over time some. Then that gets you to the cash buyer ASP, or how much somebody ordering a Model S in the design studio thinks they're going to pay based on what they've ordered. On average, I've got that at about $87,000. That had been well over $100,000 in 2022, so that number is down a lot. Then the next line is giving us the leased vehicles and other resale value guarantee impacts. So sometimes Tesla has a resale value guarantee that you can read about in the 10Q, and they spell out what the impacts are of that. But the leased vehicles also hit here as a negative because the people who lease Model S's aren't paying you the entire amount that a cash buyer is paying you, because the cash buyer gets to keep their car. They get to own it forever, so they pay you more. The lessee is only renting it from you for 3 years and then giving it back. So they reduce the amount of revenue per vehicle that Tesla can collect on average in total. That's what this adjustment is about. Then there's a destination and delivery fee that Tesla doesn't quote you as part of the price of your car, but it's a non-negotiable. Even if you pick up your car from the factory, you still have to pay the destination and delivery fee. Then there's regulatory credits that the buyer doesn't pay, but that Tesla gets to collect as revenue from other automakers. We just saw the regulatory credits revenue chart. So this is where that adjustment gets made to make sure that I'm including the right amount of revenue per vehicle on average for Model S's. I've got that at about $1,500 in Q3, only at about $170 per vehicle in Q4. We'll see if that beats by a lot. Some quarters it's very low, some quarters it's a lot higher. It's a volatile line, it's unpredictable. You get what you get when Tesla reports earnings. And then there's other. So what falls into other? Full self-driving deferred revenue. As Tesla improves FSD and rolls out more features, they can collect more of, or they can declare more of the money they've already collected as revenue. So that would hit here. Over-the-air software updates hit here. So acceleration boost, data plans, $10 a month data plans, stuff like that. Needs to get counted and hasn't been counted yet. So that all gets grouped into this other bucket. I've got about $400 per delivery worth of that revenue, making total revenue per delivery of $83,000 for Fremont Model S's, with revenue for this model in millions of dollars as $916 million worth of Model S revenue in total. Then for Model X, I've got the same kind of information here. So a similar story here. The price of the Model X came down to only $79,990 for all of Q4. Again, free paint. I think maybe about $3,000 per vehicle on average worth of performance package. So Plaid upgrades for the Model X. Wheels at about $1,600. Those wheels cost more, I think, on the Model X, the performance wheels, or whatever the special wheel is for Model X. More options are available for Model X for interior configurations, so probably more spending there. I've got $3,500 each. Full self-driving, about the same, exactly the same forecast as I have for Model S, about $6,000, making $94,000 worth of cash buyer ASP. A little heavier hit for the leased vehicles and other impacts. $6,000 is what's in my forecast. As a contra revenue, this is a downward adjustment in revenue because the leased buyers aren't paying you as much as the cash buyers pay you in revenue that you can collect. Then you got the destination and delivery fee, regulatory credits, and other, getting you up to $90,000 per Model X worth of revenue, or a little over $1 billion worth of revenue from Model X. Okay. Then we get to the Model 3, so let me show you these in case they're not on the next slide. $38,990 is the starting price for Model 3. Paint, maybe $500 worth of paint. You've got a few options for paint. Maybe they're all $1,000 now. Maybe one of them's more than $1,000. I usually check this before I update my forecast. Then we've got wheels, maybe a $200 revenue boost for people buying optional wheels in their Model 3 on average. Interior, maybe another $200. Full self-driving, maybe $1,500 per. So that's going to assume like a little over an eighth of Fremont Model 3 buyers buying the FSD package. The sales are better in the US than they are in other countries, making a cash buyer ASP for Model 3 in Q4 of about $43,000 is what I think. According to my forecast, the order is the same in all 4 stages for production sites and models. Here's the rest of the Fremont revenue per delivery section. So here's the rest of Model 3. There's the $43,000 we were just looking at, repeated at the top of this slide. So leased buyers are going to be a smaller ding here because there's a lot less people leasing Model 3s as a percentage of total Model 3s delivered. Destination and delivery fee is the same. Regulatory credits is the same assumption for all models at all sites. I'm just using an average for all of them because it doesn't matter. And other of maybe $1,200 here to $44,000 in total. What about the Fremont Model Y? Well, it's got a starting price of $43,990. Similar assumptions here for paint. Performance package only about $1,000 per Model Y, I think. Maybe not that many people buying the Performance Model Y. Similar assumptions for wheels and interior to what we just saw with Model 3. Same full self-driving assumption, $1,500, making $48,000, rounding to $49,000, $48,525. Less the leased vehicles plus the destination and delivery fee and other gets you to right at $50,000 worth of all-in revenue per Fremont Model Y is what I think. So, you know, about $5,000 more per vehicle in total than the Fremont Model 3s. Then I do have Fremont Roadster assumptions on here if you want to see what those look like. $200,000 base price, $259,000 as configured, including the performance package, which might fall some over time, but the full self-driving might rise some over time. So that gets you to these assumptions that are pretty meaningless, as you can tell from the revenue for this model line. $4 million in the first quarter because they're going to sell so few of them. $30 million, $53 million, maybe $100 million by Q4 of 2025. Folks, there is not a lot of revenue in my model for the Fremont Roadster, the new Roadster. That is $0.1 billion worth of revenue. And it might get pushed if Tesla doesn't get serious about making some new Roadsters soon. Okay, here's tweet number 51 from my thread. Here's most of the Shanghai section. So what do we think about pricing in Shanghai? Well, for the Model 3, Base price is less than $31,000. That's pretty low. There's some built-in taxes if you're wondering how it can be that low a number. That's what's going on there. So then we've got paint, the same rigmarole. Performance package, wheels, interior config, full self-driving, maybe only 33.6 at the cash buyer ASP line. Not much leasing happening from Shanghai's Model 3s. But you do get the destination and delivery fee, the regulatory credits, and the other that might make a total of $36,911 is what's in my forecast for Q4. And then maybe Tesla will be able to do a little bit better than that next year. I've got $38,000 worth of revenue per delivery every quarter in 2024, maybe rising some in 2025 on the strength of more people buying FSD as time goes by. I've got that number pretty low currently. What about the Shanghai Model Y? Well, the base price is a little higher, maybe $4,000 higher. Not a lot of differences here versus the Model 3's assumptions otherwise from Shanghai, making about $41,000 worth of total revenue per Shanghai Model Y, which is the vehicle Tesla produces and sells the most of globally, using Shanghai as their export hub. What about that small robotaxi? What do I have in here for assumptions? Well, it's supposed to be a $25,000 car, so I have a base price of $24,990 here. Can Tesla price it at that level? I don't know. We'll find out. If they announce something different, I'll change this number to something different. With small assumptions here for paint, wheels, interior options. But they may make a lot of money off of full self-driving. They may require you to purchase full self-driving if it's a robotaxi, right? Isn't that what it's supposed to be doing? So we'll see. That's what's in my forecast for right now, is that you'll still get about as much total revenue out of this smaller robotaxi if you make people buy the full self-driving option and if that price goes up over time. Here's tweet number 52, the end of the Shanghai section, the start of the Berlin section. This is just wrapping up those last few details on the Shanghai robotaxi that might actually be making Tesla 40 grand per vehicle sold or thereabouts in 2025. But there's a lot of ifs involved in that. They have to get pretty serious about making a production facility to produce that location quickly if they're going to be selling those at very much scale in 2025. Very small revenue amounts in the early quarters, with over $1 billion in my forecast for Q4 of 2025. But that's 2 full years from now. We still won't have the revenue numbers for Q4 of 2025 2 years from today. All right, Berlin Model 3s. What do we have here? Well, I'm assuming similar things to what Fremont Model 3s have, except that I'm assuming a ton of full self-driving revenue in Q4 of 2025. I've got my $20,000 assumption in there. So we'll have to play with that some in my next forecast update. Here's the Berlin Model Y. What do we think for it? Well, about $34,000 for the base price, about $55,000 for the all-in, because I've got a ton of LR/performance package in here. Why am I so aggressive here? It's because they don't make the standard range Model Y in Berlin. They only make the long range. So that's what accounts for all that extra revenue above base. The base is the standard range Model Y, and they don't make that kind. That's the primary difference between this section and the other Model Ys we saw already. Here's the end of the Berlin section, the start of the Texas section. I assume the base price of Cybertruck will decline some in 2025, but will hold firm in 2024 when Tesla will only produce dual motor in the first half of 2024 and only produce tri-motor Cyberbeast in Q3 and Q4. I'm assuming a very low take rate on the $16,000 battery range extender option, 10% of Cyberbeast orders, 5% of dual motor orders, as I think the use case will only apply to a minority of buyers. Just trying to describe the new dynamic we have in there. We didn't know there was going to be a range extender for Cybertruck until Tesla announced it at the first deliveries event. All right, so there's the last of the Berlin European model section. We don't know what this is going to be. Maybe it'll be the next generation platform. I've just got some placeholders in here for it. So there's something in my forecast. Here's one for the Texas Model Y. This is very similar to what the Fremont Model Y numbers look like, about $50,000 per vehicle from Texas. So I've got that growing over time with some base price able to be taken over the next couple of years as Model Y gets more popular, word spreads, order backlog gets longer. I think Tesla will raise the price to throttle the backlog down on that item, or that's what I'm forecasting. Then for Cybertruck, we know the base price is $60,990, but we also know they're not selling any base single motor Cybertrucks right now. They're only making the dual motor, which costs an additional $19,800 to get that up to $79,990 or whatever this needs to be. There's something else happening in here, which is that the range extender option is also in here. So I've got a very low take rate, a 5% take rate on the dual motor Cybertruck for the range extender option of $16,000. That's tacking on an extra few $100 here. And then full self-driving, I've got an assumption that about half of people are going to buy full self-driving with their Cybertruck. So that makes about $86,000 worth of revenue per Cybertruck sold in Q4 to the 69 people who received their Cybertruck in Q4, according to my forecast. With that number rising as we go through Q2 and the Cyber Beast becomes available. I have that being the only kind of Cybertruck that gets sold in Q3 and Q4, but that the base price will start clipping down every quarter throughout 2025, and that finally they'll start offering single motor Cybertrucks in the second half of 2025. So that's how my revenue, cash buyer ASP, is rising from 87,000 to 88,000, 109,000, 108,000, 96,000, 85,000 to 80,000, 79,000. So that's what's going on here. It's the mix of those options changing over time as Tesla only has Cyber Beasts available in the second half of the year, etc. Do I have extreme confidence that it's going to play out exactly that way? No, but I have to forecast something. That's what I think is likeliest. So that's what's in my forecast. Let's look at the next one. Here's the Cybertruck and Semi sections at the start of the summary section. I'm assuming semi production will ramp up in the second half of the year as more 4680 battery cell supply becomes available, but there's a risk of that slipping because semi is a low priority. What do I mean by that? I mean, if Tesla doesn't have enough 4680 cells, they're not going to build a lot more semis because semis consume so many 4680 cells each. You'd be better off putting those into Model Ys or Cybertrucks and then being able to sell 5 vehicles instead of just one semi, right? It's better to be able to ramp up Cybertruck production than it is to be able to ramp up semi production for your P&L. So here's the second half of the Cybertruck revenue per delivery section that we haven't looked at yet. Just some standard assumptions in here. There's no leasing that'll happen until maybe Q3 of 2024, and then it'll probably be small. I've just got a $2,000 placeholder in here for leasing Cybertrucks. Maybe it'll stay zero for a long time and Tesla isn't going to let people lease them. Who knows? But there will be destination and delivery fees of similar amounts to what you'd pay for any other vehicle. And there will be regulatory credits. I've got that money in here, which dwindles to very small numbers at the end of 2025 for some reason. Then for other, we've got FSD, deferred revenue, over-the-air software updates, stuff like that. about $1,000, $1,500 depending on the quarter. Making 90 grand initially, jumping to 110 grand-ish throughout the second half of 2024, and then falling back to about 100 grand, 85 grand, 80 grand by the end of 2025 as Tesla is able to ramp up to a lot more delivery volume. They'll have a lot more revenue, even though it's at lower revenue per vehicle because they'll be selling more vehicles. Okay, what's next is the Semi. Semi, I think, is priced at $299,900 at the base, and then if you want the long range, it's an extra $49,000. So after you put the full self-driving on there, that makes a little over $350,000 worth of as-configured pricing for the Semi, and then with those adjustments, I don't think you can lease the Semi. I think you have to buy it. You get to about $360,000 per Semi sold, which is still not very many millions of dollars worth of revenue. I've got it under $20 million per quarter worth of revenue until the second half of 2024, when Tesla can start ramping that up to the scale they want, which would be, a little over $1 billion worth of revenue from Semi per quarter. The market isn't enormous for semis in the first place, but if Tesla is able to demonstrate that you can save a lot of money by buying semis and then not having to pay as much for fuel or for drivers, if you can platoon semis to play follow the leader using FSD, Tesla will be able to sell a lot more than what I have forecast by the end of 2025, but that's a lot of ifs. So I'm playing it more conservatively than that and saying no, they'll be at medium assumptions for deliveries and for revenue per semi. Okay, so that gets us to the total section, which we can see in the next tweet, tweet number 55. Let's add all this up and see what is the average revenue per vehicle for all sites and models combined. Oh, the first thing that I do is I show it to you by site. So here it is for total Fremont. These numbers are going to be higher than total Shanghai because, among other reasons, Tesla only makes Model S and Model X at Fremont. So that's artificially weighting the revenue per vehicle higher from Fremont than from Shanghai. They also just have the lowest prices in the world from Shanghai, so that's the other reason. Then, down to this next section, here's the last of the site subtotals and the excluding leasing section. So here's what Berlin and Texas look like. Berlin a little higher, all they make is Model Y, and they don't make standard range, so that's why their pricing is a little higher. And here's Texas. They're mostly making Model Y right now. That'll get dragged up some when they can get to more volume of Cybertruck, and as more people buy full self-driving from the Texas production site, those ASPs should be rising. That's what I have forecast. And at the bottom here, I've got how much revenue is being contributed by Model S, X, 3Y, Cybertruck Semi, Roadster, Small/Robotaxi, and European model. So you can see all those numbers here. I've got a total of $21.8 billion worth of revenue being contributed by automotive, excluding leasing, which is this first section. Then in the next section, we can see my Tesla Energy and Services and Other revenue projection assumptions. So going back to that couple of charts we saw about Tesla Energy, let's pay that off. And I did mention the long backlog of Megapack orders, giving me confidence that I can forecast a lot more Tesla Energy Division revenue in 2024 than we saw in 2023. So the top section is the same one. Isn't it? No, it's not. The top section is just leasing. So how much leasing revenue is there? About $500 million is what's shown here for Q4 of 2023. And that number will dwindle some next year to a lower number as less leasing happens, and then maybe recover a little late in 2025. In the next section, we total those up. So the section we looked at on the previous slide, plus the section we just saw here, makes a total of like $22.4 billion worth of total automotive revenue. And here's the breakdown of how that revenue is composed. Mostly it's Model Ys, 14.9 billion of it, I think, with another 5.5 billion coming from Model 3, and then about a billion each from Model S and Model X. And almost nothing coming from Cybertruck or Semi. I've got 6 million worth of Cybertruck, 0.006 billion worth of Cybertruck revenue, and only 11 million worth of Semi revenue here. I don't feel like they've been making tons of semis for Pepsi to go try out lately. Maybe the number's a lot smaller than that. I don't know. But I'm not risking much by forecasting 11 million. That's not going to be the cause of my revenue miss. However much I end up missing by. All right, so below that, what do we have? Well, it's the energy volume section. So how many megawatts of solar is Tesla going to deploy in Q4? I've got, a pretty average amount of megawatts of solar deployed for Q4, 55. In Q1, it was 69. In Q2, it was 66. In Q3, it was 49. So I'm forecasting at about that level until Q4 of next year when I've got it up over 100. And maybe it can grow in the second half of 2025. Then for storage deployed in megawatt hours, this is the really important one. I've got this growing to a new all-time high and growing from there to new record highs every quarter for the next 9 quarters, right? And probably growing more after that with the new megafactory in China helping out a lot. If China speed holds true to form and they're able to put that factory up and get it into production really quickly, then once you know those, the next question is, okay, how much solar revenue is there going to be per watt? So I've got that at, $4 in Q1, $4.14 in Q4. It was $4.24 in Q3. So we got a little bit of a decline in revenue per megawatt. Revenue per watt. Then on the next line, we have storage revenue per watt hour. So that has been reported as 43 cents, 32 cents, 34 cents. I have it ramping up a little bit, a couple of pennies to 36 cents. And then from there, ramping up by maybe a penny per quarter going forward, something like that. So that yields these revenue dollars by product below. So for solar panels, not a lot of revenue here, $27 million worth. Solar roof, I've got at $202 million. I think that's a little less than what they've been reporting recently. Then power walls, I've got at $152 million. Similar to the prior couple of quarters, kind of an average. Then for Megapack, this is the biggest and most meaningful line, the only line over $1 billion for these products. And you can see how this ramps in the future. 1.8, 2.2, 2.9, 3.6. We already saw the chart that has this revenue on it. The Tesla Energy division is going to be mostly led by Megapack. And then there's some other, including energy as a service revenue that comes through at a pretty high margin for the Tesla Energy division. This is like auto bidder software, that sort of thing. Making total Tesla Energy revenue, I'm forecasting at nearly $1.9 billion for Q4, so not long left to find out how far off I was on that when Tesla reports earnings on the 24th. Services and other revenue seems pretty steady. I've got that at about the same $2.3 billion it's been recently. This number tends to rise over time. As the fleet gets larger, there's more vehicles that can go to a service center and pay for out-of-warranty repairs. So I've got that number rising some into the future. making these total revenue numbers. So total revenue of $26.6 billion is what I think for Q4. A little higher in Q1, 27.1, and then ramping up to higher numbers in the future based on everything we've already seen from the production and deliveries and the average revenue per delivery information above. All right, what are these last couple of rows here? We've got regulatory credit revenue. We already saw the chart of regulatory credit revenue. These are not crazy numbers that I'm forecasting for future quarters relative to what we've seen Tesla report in the recent past. And you can see what the regulatory credits net growth rate year over year is here. I've actually got it declining a lot. So there's a lot of room for Tesla to beat this forecast. And then I used to keep track of the Fiat Chrysler, now known as Stellantis, regulatory credit sales pro rata commitment here. I was just keeping track to make sure I knew how much of that revenue was in my forecast, so that it added up to what they had committed to in advance. And I'll get to that next section in the next video, which will be all about cost of sales. So that's the end of this video, and I'll check in with Loki to see that he has turned around in bed, but not done much else. Before I outro and say if you liked this video, don't forget to click the like button. It's always free to do that, and it lets the algorithm know that people like you might like this video. If you haven't subscribed to me yet and you want to do that on YouTube, and if you're watching me on YouTube, I'll leave you a link over here you can click to subscribe for free, but I appreciate everyone who supports me by subscribing to me on X or on Patreon or on YouTube by joining my YouTube channel as my executive producers, Kathy Kitchler and Rebellionaire.com did, and I'll see you in the next one.